Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, David Stendhal here with tonight's deep dive for October 11th, 2017. A lot of action going on with a few different markets, so there's a lot that we can actually be talking about. But I'm going to focus on the 10-year notes because it's a market I haven't talked about yet. So in this case, we've got the trends, plural, to the downside, short, intermediate, and long-term all pointed down. We've got the technicals negative, but we've got a wave low that just triggered here, and that's what's going to be our focal point for today's presentation. So if we pull up the longer term daily charts for the 10-year notes, you can see that the trend for quite some time now has been to the downside, but it's arcing and starting to move sideways. It's basing, having touched and stayed above the 200-day moving average, acting as support to the market. It's hard to see, but there's a little dark blue line or dark blue dot here, and that is where the wave low has triggered. And that is still on the books, and it's showing up as of the 9th. So you can see that the market has stopped and done a little bit of a reversal. I just want to tell you a little bit of history. Last time we had a wave low was back in the middle of July. The market based similar fashion and started to head higher. Back in March of this year, same condition where the market came down, touched it, and had a little bit of a surge. I don't know if that's what's going to be the case this time, but I can tell you that our systems have been playing things on the long side, and you can see that we have three long positions. One occurred on the 2nd, one occurred on the 6th, and one occurred on the 9th. Now these are all short-term systems. This is a 90-minute bar system, a 45-minute bar system, and a 60-minute bar system. So obviously intraday trading, but they're holding on to their positions and have held on to positions over the course of the weekend as well. So they've been in for a period of time. So what does this mean for us? I just want to show you a longer term chart, and it kind of works off of where the wave lows have occurred in the recent past. So I mentioned that we had a wave low that occurred in March of this year. And you can see that the market had come down on this depth gauge and eventually started to surge. We had another little pop to the downside in July, again, which is where the wave low occurred. And right now, this sell-off that we've been having in the 10-year notes, well, that's caused the depth gauge to go negative as well. So the current condition is bearish and falling. But as I pointed out with the wave low, at least over the course of the year, that we've seen the market really rally after that. So I would say for the most part, the fact that we're sitting on and basing in and around, probably going to have some volatility up and down action in and around the 200-day moving average. But for our money on a short-term basis, literally we're watching the systems on the long side, and we'll see as whether or not the market is able to maintain this and really start to rally, or is this just going to be a short-term little pop and that will end up liquidating the positions here fairly soon. But I want to point out that that condition has occurred in the recent past, and that the systems are attempting to take advantage of this on the long side for at least on a short-term basis. So that's tonight's deep dive. I appreciate it. Thanks for watching. Bye-bye.